Friends and subscribers, it is now June 2012. Let's take a look at the latest propaganda sheets. This one coming out of China Daily. Rio Tinto tools up in China. They're devoting more resources to the Chinese mining operations. This should come as no surprise because there are a number of high-producing mines here in China. They have some of the actual highest producing gold mines now anywhere. And they'll continue to mine for gold, silver, copper, iron ore, and rare earth metals because that is where there's going to be growth, and there's definitely a need for it. Other news, of course, we've got the disappointing job numbers from the United States. U.S. growth slower than expected, 1.9% in Q1. The real numbers are actually worse than that. But at least they're admitting that this recovery that has been ongoing for several years now is just simply not working. Which brings me to my next point, QE3. Although the Fed denies it, QE3 is definitely coming, most likely this fall, and there seems to be no way around that. Judging by the bad numbers that the government has officially released. It won't hit the economy until obviously later, 2013, possibly later than that, but the point is that they're going to print and print some more because that's what they've been doing and that's all they really know how to do. So expect inflation to hit full force here in the very near future. Speaking of QE, what I wanted to show you is some information on China's QE2, which has been officially announced and will go into effect right away because we have slower numbers than projected here in China. 7.5% growth versus the double-digit growth that we had seen in previous years. So if it does come in even lower than 7.5%, we know we've got a real problem. Unfortunately for some of the other nations in the EU, they can't print their own money, so they're going to collapse much sooner than other countries, obviously, especially the ones with a smaller economy. China, United States, other nations can print their own money, so they can obviously delay the inevitable. Stimulus 2.0 aims to reboot growth. What they're going to do with this stimulus is try to limit inflation. And here's the CPI numbers that they're going to try and push down, stimulate retail growth within the country. And interestingly, the Bilderberg meeting in Virginia that's taking place here these past few days, the discussions are based in part around China. They want Chinese currency to grow, and although the rhetoric out of Washington may seem to be anti-Chinese, in reality they want Chinese currency to grow and their economy to continue to grow because there's so many companies and industries from the West that are here and committed to the growth of China. And they are by no means going to allow anything to stop their growth numbers. GM, Bear, the other car companies, high-tech companies, Caterpillar, you name it. They're all invested in China. They care not about the United States market because there is no growth there. So we should get used to doublespeak. Red China's bad, and we have to put tariffs in place and policies to have a fair playing ground between the economies of scale in the world. But it's a full force commitment to China. and you can see that in the investment dollars that are being spent here. Third English newspaper in China, Global Times, the third toilet paper of record. Let's see what they say. Change of economic model is only way out for China, and that basically is them admitting that there has to be a huge change for them to experience the growth that they have been experiencing up to this point, and that they can't continue to be an economy that is solely relying on exports, because they're just simply not going to be there going forward, at least not the level that they had before. Also interesting in Global Times was China, their own AAA rating from a Chinese rating agency, Lianhe Credit Rating Company. So they're not even looking at playing to the Western credit rating agencies, because they know that they're all bogus. They're just creating their own, and that is a sign that they have a currency and economic standing that can put them into the forefront. Manufacturing weekends, we know about that. Another key news article here, the yuan and yen exchange. First time that they're going to exchange currencies outside of the US dollar. That is very important, because no longer will the United States dictate the terms at which currencies can be exchanged by nations. The U.S. has really three choices that I can think of when it comes to this. They can either allow it to happen, wait for the collapse and the repeg of whatever world currency that comes about, or they can protect their interests like they had so many times before. You know, events with the petrodollar have been a good example of that. Or what they can do is they can manipulate the markets by getting involved in these exchange rate wars, these currency wars. I think that the third will probably be what they'll do. They'll probably continue to do currency raids and manipulate as much as possible until the collapse comes with the dollar. Housing prices at 16th month low. This is housing prices in 100 Chinese cities. We can see the trend. I had been saying this over a year ago, and you all have been saying the same thing. I think in Shanghai now, it's 9 consecutive months where the housing price has dropped. It's no longer a market for speculators to flip houses. It's a buyer's market, but I wouldn't buy a Chinese house. I wouldn't buy a cardboard Chinese house, regardless of the price. So that is the situation this week, coming into the first week of June. And all I can say for sure is that gold and silver are still the only place to turn. So keep stacking.